Hello and welcome back to the channel, where we break down the most fascinating hard-to-borrow stocks making waves in the market. Today, we're diving deep into SOBR Safe Inc., ticker symbol SOBR, a stock that has landed squarely on our high cost-to-borrow screener. Its annualized cost to borrow is a staggering 675.2%, and it's showing significant momentum. Is this setup hinting at potential volatility, or is there more to the story? Let's unpack it. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. SOBR logo/stock chart. SOBR Safe Inc. SOBR operates in the technology and scientific and technical instrument sector. This company is all about safety and monitoring, providing non-invasive technologies to detect the presence of alcohol in North America. Their core products, SOBR Check and SOBR Sure, offer non-invasive alcohol monitoring, biometric identity verification, and qualified detection capabilities. With a market capitalization currently sitting at just $1.08 million, SOBR is a micro-cap player, which often means higher volatility and lower liquidity. What is cost to borrow and why it matters? So, what exactly is cost to borrow, or CTB, and why should you care about it? When a short seller wants to bet against a company like SOBR, they borrow shares from a broker, sell them, and hope to buy them back later at a lower price to return to the lender, profiting from the difference. But borrowing shares isn't free. Brokers charge a fee, and this is the cost to borrow. Think of it like interest on a loan. When a stock becomes hard to borrow, it means there are very few shares available for short sellers to lend. As demand to short increases and supply shrinks, that fee can skyrocket. For SOBR, we're seeing an annualized CTB fee of 675.2% right now. These can easily exceed 100% annually, meaning short sellers are paying over 1% of the stock's value every few days just to maintain their position. This is a crucial indicator of short seller pressure and potential for a squeeze. Why this stock is hard to borrow right now. Highlight CTB numbers on screen. SOBR's current CTB of 675.2% annualized is incredibly high, and it's not just the level, but the momentum. We've seen this fee jump by an impressive 173 percentage points over just the last 5 trading days. This indicates a rapid increase in demand to short SOBR, or a significant decrease in the supply of shares available to lend, or both. Our data shows there are only about 250,000 shares currently available to borrow, against an estimated float of 2.3 million shares. This shrinking supply, combined with the escalating fee, is exactly why SOBR has flagged on our hard-to-borrow screener. Our internal composite squeeze score for SOBR is currently 46.4 out of 100, indicating a moderate but notable setup. Squeeze mechanics explained. Animate short squeeze process. Now let's talk about the magic words, short squeeze. A short squeeze occurs when a heavily shorted stock rapidly increases in price, forcing short sellers to buy back shares to limit their losses. This buying action, known as covering, creates even more upward pressure, which can then trigger more short sellers to cover, leading to a cascading effect. With a limited float of 2.3 million shares and only 250,000 available to borrow for SOBR, any significant buying pressure could quickly overwhelm the supply, making it difficult and expensive for short sellers to find shares to close their positions. This forced buying creates the squeeze. It's important to remember, however, that a high cost to borrow does not guarantee a squeeze. It can also mean short sellers have strong conviction and are willing to pay these high fees because they believe the stock will drop even further. Dilution risk check. One critical factor that can make or break a short squeeze thesis is dilution. Dilution occurs when a company issues new shares, increasing the total number of shares outstanding. This influx of new shares can provide short sellers with an easy way to cover their positions, alleviate short interest, and depress the stock price, effectively negating any potential squeeze even if the cost to borrow is sky high. For SOBR Safe Inc., we've done our due diligence and found no recent dilutive SEC filings such as -1s, -3s, or 424 BS in the last 90 days. We also found no recent reverse splits in our look-back window, which can sometimes signal financial distress. This absence of recent dilution is a positive signal for potential squeeze scenario. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. SOBR price chart with volumes. Despite the high cost to borrow, SOBR's recent price action has been challenging. The stock is down 20.42% today alone, has fallen 47.69% over the last 5 days, and a full 40% over the last 30 days. Volume has also been notably low recently, with today's volume at 1,496,000 shares, which is only about 0.1 its 30-day average volume of 60,595,040 shares. For a short squeeze to gain traction in SOBR, we would typically look for a significant surge in buying volume, strong price momentum to the upside, and an acceleration in the cost to borrow or a further reduction in available shares. Without these catalysts, the high CTB might simply reflect short sellers' strong belief in further downside. SOBR Safe Inc. certainly presents an interesting case study with its astronomical 675.2% cost to borrow and tight share supply. While the conditions for a short squeeze are present in terms of borrow mechanics, recent price and volume trends for SOBR suggest a cautious approach. It's a testament to the fact that high CTB is just one piece of a complex puzzle. Always conduct your own thorough research, understand the company's fundamentals, and assess your own risk tolerance before considering any investment. If you found this breakdown of SOBR helpful, please like this video, subscribe to the channel for more unique insights into hard-to-borrow stocks, and let us know in the comments what other stocks you'd like us to analyze next. Thanks for watching, and we'll see you in the next one.